Well, I think you've got to look at the fundamentals of the oil market right now, and those are slightly changing, but not quite the same. You've got the market was well supplied back in September when the OPEC attacks happened, and Aramco assured the market that the market would be well supplied and that there'll be no loss of barrels from that side, and that was the case. Again, you look at the fundamentals here, and where is the loss of supply right now? There isn't any. But
well, obviously, because we've just had that OPEC meeting and they've cut by another 500,000 barrels, Saudi pledging to cut more. So your point is that it's a much more razor-thin balance than we had back in the summer.
We've raised the stakes, and what we're happening is, if the OPEC cuts continue and we get tighter balances, then that creates a greater vulnerability to the oil market, to this kind of risk in the market. So there is that if the oil market tightens, but at the same time we've got to remember that the market is well supplied. We've got lots of strategic stocks, there's lots of buffers, there's also US shale, and with the way it can quickly react to the market changes, especially higher prices. So there is those factors which are
but Paul,
offsetting
there's
that.
another factor as well, and that is what if Iran go down the route of more retaliatory strikes? We saw various attacks on vessels last summer as well, and they could go down the route of attacking the commercial ship lanes. If they do that, then surely the risk premium that we saw today, the big spike that we saw in the price of oil, has to stay embedded, because if you're an investor in this, there's a non-negligible risk that something like this may happen as part of Iran's retaliation.
I think Anas and lots of people in the market like to use the word risk premium, but actually, if you translate it to the fundamentals and looking at the supply in the market, I think you've got to be careful about extrapolating that and how long that will last. We've never really seen long-lasting disputes in the Strait of Hormuz that long, and it's an election year. Remember, Trump's voters, his core support, don't want gasoline oil at the pump going up too high. So there's that factor in the market. It's tricky to extrapolate from what's happening now to where it might happen. But certainly the stakes have been raised in terms of further attacks on Middle East infrastructure.
If there is a conflict and a military conflict in the region on the back of this, where do you see oil headed? I mean, because we haven't even broken through the $70 mark, which is what we got last summer.
Well, you've got to look at where supply is coming from, and you've got extra supply coming on from Norway, Johan Sverdrup, you've got Guyana, you've got where, and the key question really is around US shale. We've had a lot of people come back from the sort of bullish views about how much shale can come on. Investors want their returns, but if prices start increasing, again, US shale as a marginal producer comes back on. And I still think even with the geopolitical risk in the region, you've still got some kind of ceiling being provided by US oil production and a floor by OPEC. And remember that if it was to get this bad, then remember that there are extra barrels that could come on from places which are under sanctions where there are lots of supply right now. So,
yeah. Well, since you have mentioned shale various times, from the weekly numbers yesterday, it does show that there has been a drop in the number of rigs in the US. Do you expect that trend to continue in 2020? And is it purely a function of where the price of oil is trading? So if it moves higher, you'd expect that rig count to start improving again?
Yes, there's definitely a function of where oil prices are trading. You think of WTI and where US companies need to see oil prices is around above $50 a barrel to start really making that returns. Right. And that's key to keeping that shale investment and interest, because remember, investment has dried up as well. People investing in not just in shale but across the oil market.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.